Hey guys, welcome. Welcome. Happy Saturday to everyone. We've got a really great panel joining us today for this discussion about sophisticated DeFi and the journey from TradFi to DeFi. We've got several awesome projects from the BSC community joining us. We'll just have a quick round of introduction. So maybe we'll start with Vasily from the PowerPool team. We'd love to hear a little bit more about you and more about PowerPool and what all the great stuff that you guys are building.
Yeah, thank you, Sammy. Hello, everyone. I'm Vasily from PowerPool. I'm a head of research, managing all the research activities in PowerPool. So currently, PowerPool is a decentralized DeFi protocol offering broadly diversified indices and structured investment products built on top of Power Agent, our own automation network. Yeah, so we think that sophisticated DeFi is automated DeFi with diversified and structured products. So yeah, this is why I'm here. Thank you.
Thanks for joining us, Vasily. Hey Ming, how's it going?
Hey, Sammy. Hey, I'm doing well. Happy Saturday.
Happy Saturday to you. We'd love to learn a little bit more about your background as well, Ming, and more about Strips Finance.
Yeah, sure. Thanks for having me. So I started my career in trading at a bank and then got into crypto in 2017. Have been a trader, started multiple trading desks, trading derivatives, sophisticated products for over 4 years. And in 2021, decided to create the world's first decentralized interest rate exchange where you can trade interest rate derivatives on Strips Finance. And so we're really excited to have BSC and Arbitrum as where we're launching. So thanks for having me here.
Great to have you with us. Hey, Danny, how's it going?
Great. Chong, co-founder and CEO of TradFi. It's a BSC-based protocol that allows users to tracking. And it also has different risk return profiles to suit users of different risk appetites, right? Serving the most conservative type of users right to the most sophisticated type. We are very happy and honored to have been awarded MBV Star Award for August 21, and also given a place on the Hall of Fame amongst the greats. Following the success of our first two funds, right, the PDC fund and the ETH fund, we are very happy to announce that our third fund, which is also BNB validator based, launching next week on the 11th of Jan. Very happy to be with everyone here today to discuss about the topic and all there is TradFi to sophisticated DeFi.
Awesome, great to have you with us. I know the whole BSC community is super excited about the launch of the BNB tranche, the vaults.
Yep.
We've also got with us today Captain X from Apollo X. Thanks for joining us.
Hey, Sammy, thanks for having me. Hello, everyone. So what we are building in Apollo X is decentralized plus centralized hybrid derivatives exchange. So it's mainly perpetual futures. So basically, where we want to start Apollo X is we see the trend that more and more people are migrating from centralized exchange to DEX. But given derivatives market is quite complicated and liquidity is always a problem for decentralized exchanges. So we want to have the benefits of better liquidity of the centralized exchange and to share the liquidity together with the DEX. So basically, that's what we do.
Awesome. So let's get into it. So maybe I'll start with a question for Danny. Interested to hear about how do you really view that the two worlds and where they intersect, as well as the big differences between them. So those are the traditional finance world, the TradFi world, as well as the emerging DeFi ecosystem. What are the big differences there? What are the big innovations that you're kind of looking forward to?
I think, first of all, to mention the good observation, I believe that DeFi and also TradFi may start on seemingly extreme poles, but the convergence is happening, and as we speak now, I think the convergence is coming faster and towards a common point. I think to look at, first of all, a lot of people have viewed TradFi as being very regulated, a lot of kind of control on what can be done and not, and because mostly it belongs to a very big structure and things may not be developing as fast. And so we have also on the DeFi end, right, where supposedly people who wants to make things happen at that instant, everyone's coming together and doing what they think is the best thing. And so-called, some people even say that this is totally like not controlled and not regulated. Whereas I want to actually bring about that point of that's why it's important for people from the TradFi background, like ourselves, coming into DeFi. I think, like for example, like Ming, he mentioned that he's a trader at heart, right, from the financial institution background. I'm pretty sure everyone over here is the same as well. With that kind of training, bringing also into what DeFi is trying to build, right, you actually have the best of both worlds. So a lot of things that so-called may seem as uncontrolled, you'll have the guys coming in by bringing in with them security. You'll see the guys bringing with them so-called very nice plan kind of a direction, and it's not just planning for the next 3 months, but both short-term and long-term kind of planning. I would say that overall, it looks that from the vast FI experiences that everyone has here, right, you can basically take what the best of TradFi can offer, but without the clutter and the baggage. For franchise in particular, right, I think it's something that we have always been mentioning time and again. We value security a lot, and that's what has been taught to us from the TradFi kind of background. We also want to a bit more kind of DeFi and TradFi together. I think now in the sense that people from TradFi wants to know a bit more about crypto and DeFi, whereas DeFi also said that okay, maybe TradFi can offer something such as a structure, or maybe the way they look at some things that can be gelled into what is happening now in the DeFi world. And I think this will ultimately bring us closer to, as what I mentioned earlier on, the convergence of TradFi and DeFi.
That's very cool. Was interested to ask you as well. What does the institutional demand for tranches looks like? Is it large? Is it growing? Yeah, interested to hear from you on that as well.
I guess you meant from a TradFi kind of institutional. Yeah. So with that, I guess we can see that the kind of demand for DeFi in especially on the TradFi world, first of all, starts first and foremost with the wealth management space, as well as family offices and EMs alike. In fact, we can see that even across institutions, I think the private client wealth segment is the fastest to take up such needs. For what tranches is, because of the fact that we mentioned before, tranches has different kind of structures being offered for different type of user profile and appetites. It will best work for entry into crypto if you want to look at that. We offer most conservative kind of product, which is a pure stablecoin USDC based product. If you want to have your first entrance into crypto, that will work for you. If you want to have a bit more into a 100% tracker of maybe PTC, ETH, BNB, or even on the leverage base, you can also look at that. And with this suite of products offered, right, I think people from kind of the FI space would be very interested, because it's a one-stop ecosystem that allows you to do conservative all the way to aggressive type of investments. Oops, Sammy's gone. Did I say something wrong? That's why he's off.
You scared him away.
Yeah.
Our host
I
is
guess.
gone.
Okay.
Sorry,
Okay.
guys.
Let me see.
I got a bit
Nope.
of
No.
internet problem.
No problem. I was wondering whether I say something wrong and like you got worried and you decided to run away.
Thanks a lot, Danny. Yeah, so maybe we'll go to Ming. A similar question, really. Like, I think interested to hear about your views about how you see that intersection of the TradFi as well as the DeFi space. As Danny mentioned, I think we see like a lot of different markets emerging within the DeFi space. There's like the DeFi degen market, which I think will always be there. As the guys that really highly value that kind of the different properties, right? It's like high decentralization is also the self-sovereign identity as well. But then you've got newer parts of that market emerging. So today, large lending protocols launching permissioned pools, for example, to address the needs around those markets for having KYC, but also in the same way, privacy preserving kind of permissioned markets. So that's the first part of the question. Second part of the question also is like, how do your TradFi colleagues see your move into DeFi, and how do those guys look at the DeFi space as well from your experience?
Yeah, so I think coming from TradFi, it was very clear when I first was introduced to DeFi and the use case of the blockchain technology that DeFi built on. I think DeFi is one of the best use cases that we have seen in terms of product market fit for the usage of blockchain as a technology, right? Obviously, you have many different chains that use different consensus mechanisms, but putting that aside, rather than when we started Strips, we started from first principles and looking at a very specific problem that exists in traditional finance, which is vast majority of derivatives is actually traded OTC between banks, and over $400 trillion of interest rate derivatives is traded between banks without a central clearing party, right? So it's Bank A and Bank B agreeing that there's some sort of transaction between the two, and then if Bank B transacts with Bank C, this again happens between the two banks, but Bank A doesn't see what Bank B and Bank C did. So this is a very different a transaction model that we're familiar with it, which is most of the time a exchange, right? We have a huge amount of inefficiency with the system in traditional finance, and you have trillions of dollars that is being settled in an OTC peer-to-peer manner that can be radically optimized and improved on using a blockchain solution where everything is instantly settled, instantly cleared. It's transparent to everyone. You have instant price discovery, and also it's open to everyone to access, right? And I think that's the beauty of DeFi, is that it's open to everyone, and it's infinitely composable, and the possibilities of innovation is boundless. So that is, I think, what attracted me to DeFi, and still is the most promising aspect about DeFi to me. And rather than having a solution looking for a problem, we started with a problem and working from first principles, using blockchain and using DeFi was the best solution that we could find. And so I think eventually the efficiency gains is just so much better than traditional finance that it will outstrip and slowly take away the power of traditional finance and slowly become the dominant form of financial infrastructure, right? And as an example, another thing about traditional finance is that a lot of the trading in derivatives that's being done between these banks requires a ISDA license, right? So if you're not a bank with an ISDA license, or you're not a big institution with an ISDA license, you're not even able to trade these derivatives, right? And so it's a closed system, and it's slow to innovation, and they use decades old infrastructure and technology that's frankly not keeping up with the times, right? And we saw that during the Robinhood crisis, where there was a problem with the settlement system, right? And a lot of people lost money because of that. So I think DeFi is a natural evolution of traditional finance, and what's most exciting to me is the derivative space, because I think derivatives is infinitely composable. You can create a derivative out of frankly almost anything, right? And for strips, we focused on creating interest rate derivatives because, number one, interest rates are the most important price in the financial market because it determines the price of money. Interest rates are the price of money. So given that it is the most important price in our financial market, it makes sense that there should be a trading exchange for interest rates. And when we started strips a year ago, we looked around and we couldn't find anyone that was creating a interest rate derivatives exchange and creating a market for interest rates where you could bet on interest rates going up or bet on interest rates going down and make money from that. And that is where we started. And we're building. We're initially building a interest rate exchange, but we will expand on that into fixed income structured products, into more sophisticated products, and I think there's a lot of potential here.
That's super cool. I mean, it's awesome watching the stuff that you guys are building. I think the composability is also really cool to think about what are the types of applications that other builders are going to be building on top of what you guys are doing. Well, obviously, that's at the more sophisticated end of this spectrum. When we look at the DeFi landscape today, especially on in an ecosystem like BSC, I think there's quite a matured and diverse ecosystem there, and products that are catering to a number of different types of requirements and user demand. We've also seen a lot of growth recently in the derivative space for sure, but also around index products slash ETFs. So would love to hear from maybe we'll start with Captain X. How do you see the decentralized derivatives market landscape evolving? What are some of the key trends that we should be looking at there? Would love to hear your firsthand perspectives from that.
Sure. As Ming just mentioned, derivatives a lot, but the derivatives that we are talking about here is mainly perpetual futures. So I think Ming basically talking about interest rate swap just now. And our product is more catered to retail users. So I think the logic is quite simple and clear. So we do see a very clear demand of centralized exchange for trading futures. So right now, if you look at the market size, the perpetual swap market the volume is like 10 times of swap market. If we're talking about BTC, for some altcoins like ETH and the other small altcoins, the futures volume is about like from 2 times to 5 times of the spot market. So there's definitely some benefits of trading futures. It's users get leverage and they can short and earn a profit in a bear market. And some users definitely want to hedge, if mostly basically for institutions and more sophisticated users. But that part, if you look at the DeFi world, that part is basically missing. We do see some decentralized futures exchange, but the user experience and most importantly, the liquidity is much worse comparing to the top centralized futures exchange. So basically, what we want to do is we want to serve the decentralized users. And as I mentioned, we do see more and more users migrating from the centralized exchanges, because if like a few years ago, and the Web 3.0 just started, and people are migrating from Web 2.0. So people are used to register an account and then deposit your crypto to a centralized exchange, right? But right now, if you think that Web 3.0 is the future, which I do believe all of us here think about that, and so everyone will get a wallet, right? So then the user habit just totally changed, and it would be more convenient for users to connect their wallet and then start trading. So basically, that's what we see, and about the opportunities and where we want to chip in.
That's super interesting. I think users are increasingly aware and accepting of making that trade-off, because the trade-off between accessing the centralized exchanges is the liquidity, obviously, but their users are increasingly valuing self-custody. And we do see very large growth in the decentralized futures exchanges as well. A lot of great examples, especially and including Apollo X. I think in the recent weeks since the launch, the growth has been super spectacular. But I think as more users and the world becomes increasingly shift towards Web3, users really understand more the value of self-custody. There's obviously some initial trade-offs that will be made there that users are willing to do as well. Thanks a lot, Captain X. Vasily, would love to hear from you, your perspectives on there. I know PowerPool has very comprehensive experience in the index products markets. We'd love to hear more about what are the kind of emerging trends that you're seeing there, any kind of changes in the profile of demand from users as well.
Yep, thanks, Sammy. So first of all, I think that it's worth mentioning that sophisticated DeFi, it's like slightly different from DGen DeFi, right? So it's not about like buying one token, getting 100x, getting a lot of farming yield on top of it that will go down when everybody will sell. So basically, I think that the ETFs or index products is something for sophisticated DeFi. So it's a trade-off between yield and diversification. So you basically can diversify your yield. You can own the basket of tokens. You can own also future cash flows, which is also important when projects offer them, for example, like PancakeSwap, like Venus, like Ellipsis, and other projects that offer substantial yields on their tokens based on staking. So what I think that indices are on a very early stage at the moment, and TVL of all indices all over DeFi is less than $500 million, while the capitalization of all DeFi tokens, there's dozens of billions, even more than hundreds of billions, right? So, but the amount of tokens which are inside indices is quite little at the moment, and this is why I think it's early. So what is the trend? First of all, I think that there will be indices for different market sectors, so like a blue chip index, index of tokens of NFT projects, metaverse, etc. So also, I think that the future is with automated indices, because the automation is something quite important. So if you will imagine any DeFi protocol, even the lending markets, even like collateralized stable coins, anything, all these protocols, they need some automation, right? And the same can be applied to indices, because if you cannot automate the composition of your index, if you cannot automate, for example, the yield harvesting to offer good interest compounding to users, your product will lose to other product that has all these features, right? So I think that the future for indices is for indices that are automated and harvest yield. So also I think that indices is a good starting point for building a lot of other products. For example, indices. So if you buy an index now, like a basket of tokens, it is long only index, right? You cannot short it. If you want to short it, you need to, for example, list it on a lending market, borrow it, maintain your position, like your collateral position. Also, if you want to make it, for example, synthetic asset, like synthetics on Ethereum, or something like that on BSC DeFi, you also need to maintain your collateral. So it's quite complex process even for shorting an index. And also there can be some options, futures, and like broadly developed secondary market. So this is what we need to make this like index industry really big on BSC DeFi, because if you can just own an index without opportunity to short, without opportunity to make other things, it's quite limited for the users. Yeah, but so this is what I think, and I think that at the moment, like Binance Smart Chain is demonstrated a really big growth. We can see a lot of exciting projects, and for example, all projects of the guys on this call, because all this interest rate derivatives is exciting for me, for example. So and I think maybe something like that can be built on top of indices, because if there is an index and it offers yield, I mean some API based on staking of underlying tokens, it's also can be used for that. Yeah, so I think that the next year will be really big for ETFs, for structured products on BSC, because I think that we need to move forward from simple primitives to more complex ones that offer more yield, more diversification, more flexibility to users. And as you said before, that at the moment people from TradFi, they're seeking opportunities in DeFi, but when people see this is like a kindergarten, right, where there are no indices, no things that are quite traditional for developed markets. It's a little bit scary maybe, or they just this TradFi people, they understand, okay, we don't have enough tools to make everything that we need, right? So, and I think that our mission here, I mean, not only Powerpool, but all projects on this call and the Binance Smart Chain ecosystem in general, is to build such products, build such tools, and offer to TradFi people something that they can understand, that they can use, that can meet their standards, but at the same time is really decentralized, is self-custodial, etc.
Yeah, super cool. I think the index assets especially in a decentralized perspective is quite interesting. Was wondering how if you could share some more perspectives or insights as well on the topic of index composition, because there obviously, if you're thinking about how in the future more DAOs will be involved with developing index compositions, much like how Powerpool is doing today. Designed by committee is not very effective at times, or has some limitations. So how do you balance that need for transparency as well as decentralization with execution?
Yeah, so the basic approach for designing index is to make it like via governance proposal. Of course, it's maybe not fast process, so maybe, we need to deliver a lot of calculations, some assumptions, relations, all this kind of stuff to value projects that we are trying to put into the index, and say why this project will get this share and that project will get that share. Inside the DeFi, it's a little bit complex probably than in traditional markets, because we have additional security risks, technical risks, legal risks, a lot of stuff that probably is not directly applicable to some companies that are already traded on institutional exchanges in traditional world. So also we have a quite fast changing environment. So for example, if you're designing S&P 500, you're not changing projects every week, right? So adding or removing new companies from S&P, as I know, it's quite a complex process, is not fast, and so it's something that is quite rare at the moment, right? But for example, in DeFi, one project like for example Tranches can go up in 1 month and became really much more bigger in TVL and user base and fees collected and fee stream in all these metrics that we can track on chain. So I think that a really sophisticated way to manage indices is to manage on-chain data using Dune Analytics, using other tools to see what is going on with the project. I mean, a real situation, not just some marketing metrics. And also we understand that market cap is important, but sometimes the TVL, the user base, the fee stream is even more important than market caps. So I think that sophisticated way to managing indices is managing them based on-chain metrics. Of course, taking into account that some of them can be gamed, right? Because it's pseudo-anonymous environment, everybody can do everything he wants, even add a lot of bots. So yeah, this is a complex question, but I think it's like some consensus between on-chain metrics that we can see transparently on Binance Smart Chain blockchain, and some probably expert opinion with financial valuations. And yeah, but I think that we need to change index composition much more often than in traditional markets, because also the staking is important, because, for example, even in PancakeSwap, there are a lot of zero pools where we can stake our assets, right? So we have cake inside the index. We stake this cake inside one of zero pools, harvesting yield, selling this token for cake and compounding cake, and bringing more yield for index token holders. But at the same time, one zero pool can be less profitable than another one that will appear, right? So we need to change this fund management, this asset management approach, and restake this cake to another staking opportunity. So if you want to maintain high yields, really high yields, so users, we need to make it in a smart way, and we need to make it automated. So yeah, I think that like future of index composition is automation and financial valuation, of course, in case of big like shifts of composition.
Some very fascinating insights there. Ming would love to spend some time talking about interest rate swaps and a DeFi concept in a DeFi context. It's kind of new to me as well. I think also for a lot of our listeners, probably they're also maybe not so familiar. So we'd love to understand a little bit about the differences from what's available today in the traditional finance world and what you guys are building in the DeFi world.
Yeah, for sure. For those that are unfamiliar with interest rate swaps, it's a type of derivative that allows you to swap any type of floating interest rate for a fixed interest rate. So, as an example, we talked a lot about yield and generating yield on this call, but the yield that is generated from DeFi at the moment, a lot of it is variable, so it fluctuates over time. So it might be 2% this week, it might be 5% next week, it might drop down to 1% the week after. So there is really no certainty as to how much the yield is going to be in 1 year from now, right? So interest rate swap is a derivative that basically allows you to fix any type of yield at a certain percentage. So for example, if the current fixed rate for the lending pool is 5%, then you can guarantee that you will receive 5% for the duration of the derivative, right? So in traditional finance, what interest rate swaps are often used for is companies that borrow money from banks that are paying, say, LIBOR plus 2%. LIBOR is the floating rate that is charged on interest for loans, and this LIBOR can change from every day, right? The floating interest rate will change every day. So what companies will do is they'll take out a loan from a bank, and simultaneously they will hedge it with an interest rate swap, so that they will lock in, say, a 5% interest for the next 2 years, right? And in addition to that, a lot of banks and hedge funds, if they want to speculate on the floating rate going up, right? Let's say they believe that LIBOR is going to go up because, say, the Federal Reserve is going to be hiking rates in 2022, or start hiking more in 2023, then hedge funds will take a long position in this interest rate swap. And if the interest rates go up, then they will make a lot of money. If interest rates go down, they will lose money, right? So it's really a very flexible instrument that has a lot of use cases, from hedging of fixed interest rates to speculating on interest rates going up or down. In DeFi, no such derivative currently exists. And I think that if DeFi were to grow and mature, that there needs to be an interest rate market where people can have the option. Again, they don't necessarily need to take a fixed interest rate, but they should at least have the option to have a fixed interest rate where they can have some certainty in the amount of yield that they're getting, or they can at least, if they're a borrower, if they're borrowing money, then they have some certainty about the interest rate that they're going to be paying in 1 year, 2 years from now. So one of the innovations that we have made as well is that in traditional finance, normally there is a time limit or expiration for these derivatives. at Strips Finance, one of our first products is the Perpetual interest rate swap. And with the Perpetual interest rate swap, there isn't any expiration. There's no time limit on this derivative. So you can have this position open for as long as you like. And when you close it, then that's when the P&L, the profit or loss, will be settled directly to your wallet. And the profit or loss is basically determined by where the interest rate has gone up or whether it's gone down.
Yep. I mean, can I ask the question about the interest rates? Because I love this concept, and I think about maybe there is a chance to make something like a basket from different interest rates, derivative markets, like a broadly diversified basket of bets on interest rates, something like that. What do you think?
Yeah, that's the products that we are really excited. We talked about composability, and this is one of the most exciting parts about DeFi is Strips can create this foundation for interest rate trading, and other protocols, they can come in and they can create baskets of these derivatives, right? They can create a basket of, say, multiple DeFi interest rates, and you can create a DeFi interest rate index, right? And so this is the index that everyone will refer to when they say, hey, what's the DeFi interest rate right now? And then they'll quote this index and say, it's 3.5%. And then you can also create a TradFi basket of, federal funds rate, LIBOR rate, overnight swap rate. And then so you have this TradFi interest rate bucket where you have a TradFi interest index. And then you can do a lot of very interesting between TradFi versus DeFi interest rate arbitrage. Maybe you believe that DeFi interest rates are going to go up faster than TradFi interest rates, right? So what you could do, you could go long DeFi interest rates and then go short TradFi interest rates, right? And if the gap increases between the two, then you make money.
Yep. So I think that we need to build a product on top of your interest rates market because it's
there's
really
a lot
exciting
of
to me.
a lot of potential. Yeah,
That's super cool. We talked a lot about we talked earlier a little bit about different DeFi or different market segments within DeFi. So like the DeFi degen side, the guys in between, the permission DeFi or the emerging institutional DeFi markets as well. But at a higher level, I think we also have I think three primary key markets. So one is the TradFi space. We've got the developing DeFi space and also the CeFi space. There's obviously like also a growing intersection between CeFi and DeFi today. I think kind of early still, but there are different user preferences among both, right? So if you think about the user preferences for the community that prefer using CeFi, it's maybe the guys that are not comfortable today custodying their own keys or want that additional level of security or whatever those reasons might be, higher liquidity among many other reasons potentially. But there are emerging services between both that are kind of in the CDeFi kind of category. Danny, interested to hear from you on how do you see that market evolving and what are the kind of demand and trends that you're seeing there, if any?
I think the kind of market now that we have, a lot of people, like even when we are doing currently this program, right, I think the education and communication part is ultimately we hope that people from DeFi and also like TradFi can have a bit more reactivity from there. And I guess to say also from kind of like a CX and also with DeFi, we hope to be able to draw a bit more understanding and a bit of influence into both. We can see that now kind of current users who are very familiar with CX, they are all used to kind of like able to see liquidity. They are able to see kind of like what's called prices are jumping at any one point. And with that, the DAO market, right, is something that offers comfort and maybe the fast transaction that go through, and also maybe the non kind of payment needed over on CX gives comfort to a certain group of users. And I would say that this group of users probably they are very familiar TradFi background or traditional kind of users. And with that coming to CX will be their first foray into crypto. For them to jump straight away into DeFi, it could be much higher, kind of a bit of difficulty. Even for myself, right, I have so many friends from TradFi asking me that, Danny, what's MetaMask? How do I set this up? Why are there so many chains out there? But for them to go directly into CX and start buying and selling, putting in limit orders, OCO orders, it's not something that they're unfamiliar with, because this is the kind of setup that traditional exchange has already been offering. Now on the DeFi world, I guess a lot of people, the first users, they may first time entrants of DeFi users or even sophisticated users have also realized that, hey, sometimes what I can do on swap on DEX, I can also do it on exchange. Sometimes it could be faster. Sometimes I could be able to get a lot of liquidity that's not available here. And a lot of time, the bigger exchanges also allow you to be able to instantly transfer via tokens, right? And now on the DeFi world, you actually have to look for bridges that allow you to cross different tokens to the different chains. So in that sense, I guess with the sophistication of both sides happening at the same time, we again now how protocols are developing across chains. I think kind of like this emergence of a combination between CX and also DeFi, right, will come in much closer. I kind of like can't put exactly my finger to say how it would develop, but it makes sense for me. For example, like on bridges, if someone is operating a CX, they should be also offering something on DEX, or they could be offering something similar on DeFi, right, to be able to allow the transfer of coins across the different chains, right? I think that's kind of first and foremost what I can see in benefiting. Next, I think also like a lot of familiarity with kind of like how P&L is being noted, and it's quite clear on CX. And now if you're actually doing on DeFi, I don't know how everyone else is doing, but for me, you know, like I have spreadsheets and spreadsheets to keep noting down, like, okay, this protocol, this is what I have, this is what I have, and look at the wallet update time to time, right? I believe that, you know, like there can be also a kind of a tracker or something that helps you look at it more easier on the DeFi side of things. Maybe that can be also activated on more kind of the wallet side of things. If I can also put it, I think DeFi, right? It's kind of like exchanges are normally more well organized in that sense, right? In terms of like whatever they are launching and stuff. I think those stuff is very clear and informed via emails, via the exchange itself in terms of their official announcement. But that sometimes, or a DeFi project sometimes, I think the way everyone communicates is non-standard. And sometimes this could provide a bit of difficulty on imaginations and how maybe they prefer to be sharing some details and some not. I think this can be seen as if more kind of like the communication for DeFi protocols get a bit more standardized, maybe that could also help. And I think a common kind of maybe a new emergence kind of help that can be given to DeFi is a protocol itself that can guide you step by step through each of the other protocol and how to use. So if you're new to, for example, BSC, there's going to be this kind of idea that is going to be useful for first time users to a fast entry into use of DeFi. I think for me, that's kind of like where I see it for now.
Yeah, that's very interesting. So I think, yeah, definitely there is a lot of demand, even from the CeFi users, to have access to some of the product and innovation and yield that's available in the DeFi space, but maybe they're not well set up at this point to be able to do that. But probably also it could be summarized as saying, like, probably all DeFi users have touched CeFi at some time, but you can't say the same thing the other way around yet, because it's kind of like a good entry, or it's like a must-have entry point at least still today. Largely,
Yeah.
also interested to hear from you, Captain X, about a similar question. How do you see that intersection between CeFi and DeFi? Where is it currently, and how do you see that evolving?
Yeah, I'm gonna chip in here, even if you don't ask. So basically, that's where our innovation is. So we are a hybrid exchange of both CEX and DEX, and we provide an exchange of sharing liquidity and match engine between the CEX and the DEX. So I think I cannot agree more with Danny what he just mentioned, that if you look at the traders on CEX, sometimes you will be astonished about how little they know about blockchain and how little they know about DEX. So probably for retail users and as well as some traditional traders, so CEX probably is a good middle ground for them to, as a first step, to invest in crypto. And as we mentioned, that the biggest challenge for DEX is liquidity. So the benefits of sharing liquidity with a centralized exchange that we can approach to traditional market makers to provide a liquidity that is almost as good as a centralized exchange, so that it's liquidity won't be by this way. Actually, liquidity won't be a problem for I like to say 90 or even 95% of the users. And something that a centralized exchange cannot serve is the autonomous, right? So by DEX, if you care about control of your own funds and you worry about security, and so you can always use DEX to serve that and connect to the same liquidity pool and have the same level of execution.
It's super interesting. Thanks a lot for the sharing, Captain X. We're just coming up to the end of our time here, so maybe we'll just have a quick round to share your closing thoughts, as well as any other interesting information you'd like to share with the BSC community here about upcoming updates on the product, or anything else the community can look forward to. Maybe we'll start with you, Ming.
Yeah, thanks. So we're really excited to have our official mainnet launch in a couple of weeks. So do keep track of our Twitter at Strips Finance for any updates. For 2022, where we have a lot of product ideas that we want to implement, and interest rate swaps is a very big market. And there's a lot of composable products that can be added on top. So I think going mainnet is our biggest milestone right now.
Very much looking forward to that. Thanks a lot, Ming. Danny, we know that next week, I think, is going to be a super exciting week for the whole BSC community with the launch of the BNB tranches. What else can we look forward to?
We can look forward to BSC AMA session on the 12th as well. So we will definitely be sharing much more details on what the fund has to offer. I think now the excitement is setting in, and people are asking a lot of questions, as in where the rebates are going to go, how is this going to be changing the pipelines for tranches. I think for us now, it's that we were emission model, and we also have some revenue that's already incoming from the various transactions. But with BNB coming in with the valid data setup, we would be increasing kind of the income the protocol is earning, and this would actually in return provide more kind of an income for the chess long-term holders. I think also in that sense, it effectively converts more from just pure emission setup and getting more and more into a revenue model. And I think itself that kind of is combining a bit of moving into pure DeFi into more kind of TradFi, where people can understand now that, okay, you know, like this is something that works, you know, transaction going on. This is other products that I understand as well. And also there are kind of the model that is generating income positively for users, just like how a company more dividends and also share increase for kind of like the holders of equity. I was going to share more on the kind of like the TradFi and the DeFi kind of a convergence, but I'll not kind of like take up too much time on that one. I'll pass the mic back to you, Sammy.
We will definitely look forward to welcome you back for a following session, Danny.
Thank you.
Captain X would love to hear more about what's happening, what we can look forward to with Apollo X.
Okay, sure. So we launched our centralized exchange back in September, and then later our DEX. And currently our DEX is only running on BSC. So for BSC users, welcome to try the I like to say the best DEX futures DEX, and the Ethereum users do not have the privilege to try it now. And and we do have a trading reward program right now. So basically, you will get, we just launched our tokens, which is called APX. So basically, if you trade on Apollo X, and you will in return get APX. So currently it runs pretty well. So do try our product. Thank you.
Awesome. Thanks a lot for joining us, Captain X. Vasily, we got a lot of PowerPool fans in the chat today. I'm sure they're all very eager to hear some news and some updates about what's coming in this new year.
Yeah. So I have a big announcement about the Binance Smart Chain DeFi Index. So as you probably know, we have a Binance Smart Chain DeFi Index. It was launched in August 2021. It's first ever DeFi index on BSC, supported by Binance Smart Chain team and PancakeSwap. So, and at the moment we are launching walls for Cake, for Venus, for Ellipsis, for constituent tokens to bring more yield to the index. So now it will be not only the first index on BSC, but first index on BSC harvesting yield, actively benefiting our users. So this is first big announcement. Yeah. I will be happy to see this launch and see the yield that will go from it. And the second big announcement about Perpetual is that we are plan to make our automation network, which powers our product, open for everybody. So it means that at the moment, automation network allows Perpetual products to operate on chain with some transactions, sign in on triggers. So if you need to harvest yields, if you need to update composition, everything is done not by centralized bots, but the automation network of agents that's taking token, that generating yield from this token as rewards, etc. But now, as we see the big demand for automation in DeFi, and we think that basically guys from TradFi, they have enough money to pay Ethereum gas, right? So Binance Smart Chain solved the gas problem for everybody. It's really cool, but also TradFi guys have no time to manage their positions. They have no time to harvest the yield. So this is, I think, one of the biggest audience for automation, because DGens, they're focusing on gas costs first of all, right? But the really rich guys are not focusing on gas costs. They're focusing on time and efforts and their attention. They don't want to pay as much attention as possible to harvesting yield, right? They need to make it done automatically. So this is why we open our automation network, and we'll make some announcements about it next week probably. And every project on BSC, if you want to automate something in your project, anything you need, you can contact us, or in Twitter, and we will send all the instructions how you can use automation network for your own needs. Yeah.
That's really awesome. Looking forward to seeing a lot of interesting innovation happening across the BSC DeFi ecosystem. Thank you guys for taking time out on your weekends to join us. It was a pleasure to have you. For the audience, thank you as well for joining in. Hope you guys have a great rest of the weekend. Thanks and goodbye.
Thank you. Bye.
Thanks, Sammy. Thanks,
Thank you
guys.
for having me.
Bye.
Yeah, thank you, Sammy, and thank you for the invitation. I will be happy to join any other sessions.
Looking forward. Thanks. Bye.